What's up, everybody? Welcome back to the Worldwide Web of Lending. I'm your host, Joe Webb, and I've got a special guest I want to introduce you today. But today's episode is about creating opportunities out of challenges working together with our consumers and what the lenders and agent do when we work together. So a lot of people out here in the neighborhood. Let's come on inside a little more private. I'm going to show you my friend Beth and have a good conversation. Follow me. Beautiful day. It's very sunny. It's a little quieter inside. Come on in. Oh, she's on a phone call. We got to be quiet real quick. Hold on.
No, that sounds great. I'll talk to you soon. Bye.
Hey, Beth. Sorry about ending your phone call.
No worries. It's great to see you.
Hey, before we get started talking about our good ideas today, why don't you tell the audience a little bit about yourself?
Sure. Well, first, thanks so much for having me. I'm really excited to be here, share knowledge, work with Joe. I've been in the real estate industry for about 9 years now. I have a team of 3 fabulous agents as well, all females. Woohoo.
Woohoo.
We work primarily in Harford County and Baltimore County. I grew up in Jarrettsville. I live in Cockeysville now. 2 of the 3 women on my team are solely Harford County pretty much. And then we do a little Carroll County, Cecil County, and then we're also in Pennsylvania. So we can do, Southern PA, New Freedom, Stewartstown, Shrewsbury, all those spots. So yeah, I love what I do. Like I said, I've been in the industry for about 9 years. I think one of the coolest things is, buying a home is such a huge financial and emotional decision in a person's life. So
You're not kidding.
It's super cool that we get to be a part of that, really to sort of, especially our first time buyers, to educate them on this process is really, satisfying. And just, it's really cool to see people go from like point A to point B and basically empower them with all the knowledge that they need to get through that process and to make comfortable decisions. That's probably one of my favorite things about the position.
That's so cool. I appreciate you sharing that.
Yeah.
Well, hey, let's get started on some fun stuff.
Yeah, definitely. Let's
awesome.
do it.
Here, come on, let's sit down and get comfortable. All right, guys, so thanks for coming in today. Beth and I are going to have a conversation again about creating opportunities out of challenges. And then as we work together, we can help consumers overcome them. And there's basically 3 areas where Beth and I kind of talked about really being able to help. And it would be before a contract, where before you found a house and made an offer and got accepted. Obviously, there's a process during that contract before you go to closing, get the keys in your hand. And it's something I think a lot of agents don't do as good as you do is after the contract, after the keys are in your hand, you have your new house, what a lender and agent relationship can do for the consumer. So Beth, let's jump in.
Yes.
So regarding pre-contract, if I talk about a challenge that needs to be overcome and an opportunity that, you and I can bring to the consumer, what's the first thing that comes to mind?
Yeah, I think one of the most popular or common issues that we have with buyers is they don't have enough funds.
I agree.
Yeah, really, having a strong team behind you is about being creative and basically, looking at that financial picture of the buyer and saying, how can we make this work? And there's several ways that we can do that. There's down payment assistant programs out there.
Yep.
State funded, local lenders have programs. So really taking a look at you as a consumer and seeing if you fit into any of those programs, not just automatically assuming, that you're going to go into a conventional product and, you have 20% down. So we're going to really look at where you can get some credits, some grants and that sort of thing to help you out with the funds that you would need. Another thing that I think people kind of forget about is gift funds. We're going to, again, talk to you about what maybe in-laws or, that you might have or somebody that might be willing to gift you some money to help with that down payment or your closing costs. That can make a big difference for people. We're also going to, if you and your partner are trying to buy, we'll look at both of you individually together. Maybe it makes more sense. Maybe somebody can qualify, if they're just on the loan by themselves.
On their own.
As opposed to both of you. So just some outside of the box things that we can do and think about. Another big thing is, especially in this market, is how we structure your offer. It's not as common these days to get seller help, seller concession, where basically the seller will give you some money towards your closing costs. But if you have, a team that can look at your finances, figure out what you need, and then we can work that into your offer, that can be big for buyers as well. And then really, I think the last thing I would say is shaving costs wherever we can. So we'll really kind of go an extra step and look at your closing costs and look at some of those title fees. Let's look at, who you're going to use for a title company, look at their fees. Can we shave some money with title insurance?
That's a great idea.
Maybe, we're looking at, the mortgage insurance, just stuff like that.
Yeah, that's great. I mean, down payment's obviously one of the big 2 or 3. And for me, the way I dive into it, obviously credit is the biggest challenge on my end when I first meet a family or a couple or individual. And there's a lot we can do out of that. And earlier the better, obviously, when we go to pre-qualify somebody, I'm going to want to get a hold of that person as soon as possible in their home buying journey in case there is something that becomes a challenge, because the opportunity comes from planning and prepping. And if there's something there we can positively affect, we're going to want to know about that as soon as possible. If somebody calls me on a Friday and say, I'm going to go see this house tonight, I'm pretty sure I'm going to put an offer on it. Those are a little tougher situations, but we can, make some magic. I think you hit on something really special too. Just understanding that there are some consumers who are in a relationship, whether it's married or just a couple, significant other, where they can handle the loan on their own. And if we can structure that and identify that early, it's a major opportunity, and they can still be on the deed of the property. Absolutely. Ownership is possible without being on the loan. That's not everybody, but it's a great thing to know up front. And that also brings into play co-signers. It's an old school trick to bring in a parent or grandparent, but I think nowadays with the older community recognizing it's a little tougher to buy a house because of the way things are in 2024. I think I've seen a lot more volunteerism from the older members of the family to just give that gift. And some of the older folks say, hey, I have an inheritance here, but I don't mind actually watching my inheritance go to work. Not $100,000, but 5-10% down, and it can really make a huge difference in everything. Yeah. Okay. Well, what about the idea of misconceptions? When I say that, Beth, what comes to mind?
I think one of the oldest ones, which I think we've been doing it so long that we don't think it is anymore, but it totally is. People still think that you have to have 20% down to buy a house.
Yeah.
And that's just not the case. And again, we could maybe find some people are lucky enough to be in a 0% down program. They exist. But really 3.5% is probably the minimum that you need.
Yeah.
Again, depending on several factors, but 20% down is a huge, sum of money, and it's just not what you need anymore, to be able to purchase. So don't think that. Totally.
Yeah, and I think that misconception leads to a fear that prevents them from getting into the marketplace, period, right? And one of the misconceptions I always think about is that rent versus own, and it starts with misunderstanding of the marketplace. And you hit on the nail on the head, right? I think other than not needing 20% down, which could be an incredible amount of money. The other idea is, I think, building equity. People don't understand that when you make a rent payment, you're making a mortgage payment. It's just somebody else's. So we have this conversation about what does the mortgage payment do for you, short-term, long-term. It is a cash flow issue. We get around that, make sure your income can handle it. But you'd be surprised, or maybe the general public would be surprised to know that most people's first mortgage payment is within $500 of their rent. And that $500, give or take, is basically building you equity, and it's part of your asset portfolio. For most Americans, your largest asset is going to be your house. Not everybody has $1 million insurance policy or $1 million in stocks, right? Be a beautiful thing. So you have to begin that portfolio somewhere, and homeownership is the perfect way to do that. That's some good topics,
and
I think.
On
Good.
First Buy, we talk to a lot of people that say, like, I want to save for another year. Right. And renting serves a purpose for many people, and we'll never push you. But all we would say is, let's look at that, because a lot of times people are spending, $1,200, $1,500, $1,800 a month on rent. And they're like, I want to save for a year. And I don't think that you realize, even though it's that amount of money per month, what that lump sum looks like after a year. You could be spending $15,000, $20,000 for the entire year, and you might only be saving an extra $1,000 a month. And so I think when we kind of give people that knowledge, and we can, do an actual comparison of renting versus buying, you can really see that it might not be in your best interest to hold out another year and pay rent because you're saving money that's ending up canceling each other out or maybe worse off. So, if you're in that scenario, it's a great exercise to do, and something that we do with buyers is let's just look at the numbers. Let's look at how it plays out. And then make a decision.
I think the last thing I'll say too is the word down payment to a consumer might mean the money in their bank account that they can use or plan to use. But in our world, down payment is a percentage of the pie chart. And so we have to bring in a little more knowledge, like you say, to make sure they understand everything. But when they have that bundle of savings, we can use that in multiple ways. But sometimes just educating about the actual definitions that a consumer may use versus an industry professional is a way around a misconception. Well, those are some pretty awesome ideas pre-contract, excuse me. It's the second time I did that. Let's kind of go into what happens after you find a house and get a contract.
Okay.
Awesome. Good job.
Yeah.
That was good.
Yeah.
So what do you got there, Beth?
I got a contract.
Well, that's perfect because the next segment is what happens that is going to cause challenges that we can create opportunities out of once we have a contract. So congratulations on your contract.
Yes, you as well.
Thank you. So I'm pretty sure I know where you're going to go with this, but when you get a contract in, congratulations, high five, rah, rah. What do we have to be careful of almost off the bat?
Inspections, which is, pretty much what we're going to do at that first week. It's sort of our first, hold our breath. Let's get through this first challenge. But there's always opportunities. So, a buyer does have to pay for their inspections, but it's money very well spent. You get through the inspections, you get to see everything that's going on with the house, but unfortunately, things don't always work out perfectly.
Yeah.
It's obviously very common for there to be repairs needed, things broken, that sort of thing. So it's tough because, a buyer already has their closing costs and their down payment. So, we kind of have to put our heads together and think about how we're going to get through the challenge of when things do need to be repaired, how are we going to handle that and who's going to pay for it. So again, it goes back to having a strong team in your corner, having people that are going to communicate well with each other, figure out a plan, and really have some strong negotiating power. One of the things we can do is go to the seller and ask them for some seller concessions, a credit to go towards what needs to be taken care of. Another thing that we can do is talk about warranties. We'll talk a little bit more about that later on, but we could also, not often will a buyer's agent ask a listing agent to ask that seller, what warranties do you have on stuff? What can we get covered by a warranty to help out our buyers once they get in to cover some of the costs of what repairs need to be done?
So you and I have a very specific example of a very big challenge that can become an opportunity for a buyer.
Yeah.
Why don't you tell the audience about our friends who shall remain nameless and what happened to them during the inspection?
Sure. So it was a house in Pennsylvania, an older house, a really cool historic house.
It's beautiful, yeah.
Beautiful, went through the inspection. Everything really went very well except for one issue is there was termites. And honestly, termite damage is not that uncommon. We see that a lot. We can work through that. But there were actually active termites. And this house was hundreds of years old. So it was also not that big of a surprise, but it was certainly something that we had to get through. And it was a little dicey, but we had, again, a really good team in place. We had people that really wanted to get to the end result, which was, buying this house. And so we had to work through a couple, that kind of caused also some other issues as far as an appraisal, how we handled that, and then how we handled the delays and that sort of thing. So, but we got through it and we got the seller to take care of everything that they needed to take care of. Our buyers did not have to come out of pocket with anything. We were also able to make sure that the company that did the work for the termite and the construction, that they guaranteed and warranted their work, kind of took a couple extra steps to make sure that, you're only in that time period for a couple weeks. We wanted to make sure that even after the fact that they would be taken care of.
Yeah, and then so the YouTube series itself, right, is about the advantage that a consumer has with a strong team between lender and agent. This episode obviously being about overcoming challenges and making opportunities. This was a big one for us because there was $10,000, right? It was substantial because the termite damage was a supporting beam. So I think one of the really special things that I got out of our transaction together was there was a lot of opportunity for drama, and we kept it cool.
Yeah.
We knew that we were both trying to get the best situation for the consumer, which at certain point could have been walking away.
Mhm.
But I think working together and giving that buyer confidence that there is a pathway to get the keys in the hand. I feel like, and I remember that they said to me, the wife said to me, we never really got upset. It was, this is a situation. What are our plans? What are our options? They talked to Beth, they talked to myself, and we were able to overcome them.
Yeah.
So, and then I think they were actually laughing in the end about how they got a little remodel out of the basement because of the work that had to be done. So that's kind of the opportunity that came out of it. And you mentioned kind of hidden in there was the appraisal. I remember one of the first things you and I coordinated on was let's hold off on ordering that appraisal. The appraisal process can be long and dramatic and scary for some people. It's not supposed to be. But Beth recognized that we didn't want the appraiser to come back into the property until the work was done. So we said, why don't we just not have them come out at all? And we held that off. Yeah. And it's, normally it's a hustle and bustle. You get a contract in, you order title work, do the application, because I've got 2 or 3 days to do that per contract. And then boom, you want to order that appraisal. Yeah. And, we worked really good together, being able to say, Mr. and Mrs. homeowner, or buyer, let's just hold off on this and explain why. So that was a pretty big deal.
No, it was great. And it was great because we were always on the same page from the start.
Yeah.
A lot of the times, I usually have to tell the lender, hey, hold off on ordering the appraisal because even before we knew there was the termite issue, right? The buyer has to pay $500 some for this appraisal to be done. And sometimes they'll order them right away. And it's like, well, hold on, let's make sure that we get through this inspection, just in case something goes wrong and they need to walk away. Yeah. We don't want your $500 some
poof.
to be gone for no reason. So I remember calling you and being like, hey, let me get through this inspection. And you were already on it. You're like, I'm already going to wait. You just tell me. So it was great. Again, if you got 2 people, working on the, on the same thing, the same mindset, then, nothing can really get missed.
Yeah, I used a metaphor in another segment about a football team because I use football coaches. It's always in my brain. But, I prefer to have the realtor be the quarterback, and I'm okay with that. But I'm still an important part of the team, running back, whatever. But ultimately, the consumer takes the ball over the finish line when they sign the documents at the end and get their house. But in this situation, we were on the same page with the plays.
Yeah.
We knew that we had to separate these steps because they were dominoes, but we couldn't push that first domino until the inspection was taken care of. So that was pretty awesome.
It just goes so much smoother that way. Yeah. And then that same scenario which is another point, is, there's delays that happen in the transaction. Mm-hmm. And those delays can cause challenges. So, again, sort of that domino effect. So we had this situation where we were backed up because of the termite issue. We needed to get everything repaired. Well, then next thing their rate lock was, their rate was going to expire.
That's right.
And that could be a big deal because, you could end up getting a rate that's not as good. You could have to pay for that extension, which is more money out of a buyer's pocket. Mm-hmm. So we didn't really have to deal with that because we were on the same page and we knew that could be something that would happen. Yeah. So we sort of created a plan all right, if this happens, we're going to do X, Y, and Z. Yep. And so we just sort of, instead of, again, being reactive, we were totally proactive with that scenario.
Yeah, I forgot about that. We had that call where you were like, well, when is the rate locked to?
Yeah.
Well, it's not going to happen. So what are the plans? There was a dollar amount we talked about per day. And I think letting that family know that ahead of time, there was no drama. It wasn't a surprise. And nothing goes well last minute. But the more proactive a team member can be is great. Yeah, that's fantastic.
I mean, there's a lot of things that are unexpected. So again, to just have a team that's going to be able to handle things and be proactive with a lot of that stuff, it will, it'll get you through those moments a lot easier and smoother.
Well, I'm kind of thirsty. I'm going to go to the kitchen and get a drink, and then let's talk about what happens after you have the keys in your hand and you have a contract completed, but you still need help from you and I.
Sounds great.
Cool. Awesome. We have had a lot of good information today about before we get a contract, during a contract. So all we have left is after a contract. So what kind of opportunities can be had out of challenges? I mean, I know for me off the bat, a lot of people get a little nervous about the money they're putting into a transaction. Sometimes they pull from a 401k. Sometimes they drain their savings. We don't want anybody to be house poor. There are certain situations, and I don't know if you've come up across this, where after you get the transaction, because of the large down payment, we can go and get and open up a home equity line of credit almost within 6 months of buying a house with no intentions of using it. It's just there for a rainy day, for reserves and emergencies. That's a cool idea. And then I think obviously we're recording this video in 2024. It's kind of a interesting rate market. It goes up and down, but we're on the higher side. So a lot of people are asking me, when is a good time to refi and why do I refi? And I'm not going anywhere. So after you buy a house, we've been talking about getting your keys in your hand the whole day. We're not going anywhere. I'm there to answer questions. You get weird stuff in the mail for advertisements that have my name on them or my bank name. But refinancing is a non-emotional conversation. It is all mathematics. When you should do it and what you're going to get out of it is purely a mathematical equation. So what I usually tell folks is that we're going to pay attention to the market. And when you start to see a significant amount of rate drop, I'm going to have things in my marketing system that will trigger me to communicate and say, hey, we may have something here. But if somebody calls me before that point, we're going to do some math. Ultimately, it does come down to the payment legally has to go down substantially or you're not allowed to refinance. But while we're in that conversation, there can be some other goals too. If the rate goes down far enough, we can reduce the term, go from a 30-year to a 25, which saves a credible amount of interest, as long as you're eligible for those programs, obviously, and the difference in payment. But there are also other opportunities to switch programs. Sometimes people get in with an FHA because that makes sense. 6 months to a year later, the value's gone up, the rates have gone down, and when we revisit it, you can go over to conventional because that mortgage insurance will go away one day. So those are kind of some cool things. What about on the agent side? What kind of comes up after the contract and after the hug and the high five for you?
Yeah, well, and like you said, I'm not gone when the settlement day is over. So we're there for the long haul. But I think probably people get into houses and all of a sudden you don't have a landlord anymore, like you're in charge. And so there are unexpected home maintenance or repairs that will come up. And it's hard, especially if it's in the first year because, you put all that money out. So, we always, part of my sort of closing checklist for people is to just introduce them to the idea of home warranties. They cost, maybe $700, $800, depending on what programs. They're pretty inexpensive compared to some of the maintenance or repairs that you might need to do. And so that's for a year. And then it sort of gives people a peace of mind that, if you need something, you have that warranty in place for that. I also tell people to just come to me. Being in this industry, we work with a lot of other people in our industry. So we can always make referrals, for people that we trust, that maybe can, come over and take a look at things or help you out.
Also, something we didn't talk about too, but just kind of reviewing your homeowner's insurance policy. So throughout the years, you have a policy that's going to be paid by your mortgage payment probably 99 out of 100 times. But if you ever decide to shop around for insurance, you do have the right to change your insurance policy if you find a better deal. And if your premium goes down, it could drop your mortgage payment. So just kind of pay attention to that. What about property taxes?
Yes, that's a good one. So you have your property taxes, they will increase. And so, it's definitely something to pay attention to. Usually about 3 months after buyers settle, we also, our system knows to remind you, the consumer, to put in place a homestead tax credit, which is something that Maryland offers that sort of caps them from increasing too much in one assessment time period. And then I think you can also appeal if they're very high. I think there's a process for that as well.
Yeah, so there's a third-party tax appeal company that if the tax assessment does not match the value of the property or the tax rate you're paying, you can have that reviewed. Now, I don't know all the details of that, but if somebody comes to me and said, have you ever heard of that? I do refer them to some folks to have a conversation. And I don't know how many people out of 100 get a tax appeal, but from my experience, the ones that have identified a proper situation, it's pretty significant.
Yeah, opportunities, lots of opportunities.
So I cannot imagine, again, a scenario where people watching this video aren't learning something. I really want to thank you for your time today. I know that our business is crazy and we get phone calls left and right. I appreciate you silencing your cell phone for a couple of minutes today. So thank you very much. I really appreciate you coming. It's been awesome. And I appreciate using that customer that we had. It was a little crazy with the inspection.
A lot of examples for us with our topic. So yeah, for sure. Thank you.
Awesome. Well, thank you very much. And thank you for watching. All right, guys, we've really had some great information today. I want to thank you so much for watching the episode about creating opportunities out of challenges as we work together with consumers. Hope you enjoyed Beth. She's a super awesome agent. And if you're in the area, definitely look her up if you have some real estate needs. But I'm going to let you guys go today. Be sure to watch the other episodes of the harmony between the lender and agent relationship as it relates to consumers. As always, please, if you liked something, hit the like button and subscribe. Welcome back for those returning people that have watched other videos to the Worldwide Web of Lending. Once again, I'm the host, Joe Webb. Thank you very much. I'm going to let you guys go today, and I'll catch you in the next episode. Thank you.